Yo, it's your boy David E, aka David L. Patron, and today I have my boy Christian here with me, and he's going to be teaching you guys how lending actually works. He's going to actually teach y'all about the interest rates and what's kind of going on in the world today, Christian, because people definitely want to know. So can you kind of give us an insight on what you do and what's going on?
Absolutely. Well, good morning. My name's Christian Fagioni. I'm president of Nations Mortgage. I'm a division of Nations Loan Services, where we also do other types of commercial products and business brokeraging as well. But I run the mortgage division, and so as far as interest rates go, of course, that's the big topic nowadays. Rates have been climbing up. We don't know what they're going to be doing. If I did that, I'd be working on Wall Street right now. But people are projecting. I mean, what we're hoping is that interest rates are going to kind of hopefully level off by the rest of the year, and then start to come down at some point next year. I don't know the next time that we're going to see interest rates in the 3% range again. I think it might be a while, but I don't think that sixes are off the table, and even fives before too long. So
this is what I think, Christian, because when you think about it, so before the COVID-19 thing, you and I both know that interest rates weren't at 2 and 3%, right? So I think people have to get more on the thought and the page of understanding we're getting back to normal, right?
Well, so this is the new normal for now, and yeah, you're right. So the before COVID or pre-COVID, when the rates were, the rates were kind of, I guess they were more in the 4% range pre-COVID, okay, if I recall correctly. And then it was actually after COVID once the rates dropped. That was during 2020 and 21, and that's where there was a big refi boom. And that's when they got down into the 2% range for certain individuals, and a lot of people were doing it in the threes. So, I don't know that we're going to be seeing that again for quite a while. But as far as what the new norm is, I mean, rates, that was not normal. Having interest rates, that I definitely agree with you on that. That was not normal for rates to be in that range.
Pretty much almost unheard of.
Yeah, I mean, I don't know the last time rates were that low. And they haven't been this high in 40 years,
Wow.
So it's been that long since they've been this high. But look, right? Interest rates go up, interest rates go down. Interest rates have never gone up and stayed up. I mean, they just don't do that. So they'll be coming down at some point. Hopefully they'll be becoming a little more manageable.
So you think we're looking more like 2024-ish?
Well, I think 2024 is, look, predicting rates is an impossible task.
Right, because next week it might be something totally different.
Yeah, but even on a long-term scale, it's hard to do. But I will say 2024, of course, is an election year. That can tend to have an effect on rates. I think that rates are pretty high right now, and if they start going any higher, I think that certain political angles are start going to have a little more problems trying to hold their heads up. So,
right.
They're generally going to try and work towards interest rates. But, I was telling somebody the other day, when interest rates go down in an election year, the incumbent party tends to take credit for it. And when interest rates are going up, they tend to say, well, there's not much we can do about it.
So what do you think, what type of loans do you think people should be going after right now?
Well, that depends on what the current situation is for the customer. Now, when it comes to traditional mortgages, like your Fannie and your Freddie, FHA, VA, rural development. I mean, we do all those types of loans.
Okay.
And I mean, those are all right for the right person. Usually, the person's situation dictates, so like their credit score, their down payment, how long they've been on their job, different things like that dictates what program the customer is going to be into. So there's usually one program that's right for the customer, and it's usually pretty blatant.
Right.
So now sometimes there's a choice, and it's FHA or conventional, and it's like depending on where the credit is, what have you. So sometimes we can kind of have to help put them, narrow them down a little bit more. But there's no one right product right now. So now I'll tell you some good products that we have. So one is the DSCR loan. So that's great for investment.
So can you kind of first explain to people what DSCR even means?
Yep.
Because most people probably don't even know what that means.
Yep. So the debt service coverage ratio is what DSCR stands for.
Okay.
And so what it does, that's an investment loan. So that's for somebody, or for an investment property. So that's for somebody that's looking to buy I have companies that I'm a broker, so I broker loans to different banks. So I have one bank, one lender that will do as many as 8 units. Most of them will do 1 to 4 units. But what it does is it cash flows the loan based on the rental income that the property is producing. And compares that to what the loan payment is that you would be taking out to be able to buy this property. So as
basically,
long
that loan pays for itself.
Right. So the debt service coverage ratio, DSCR. So as long as the debt, which is what you owe, the mortgage you have on that loan, is covered by the servicing of, or is covered by the income from the property, from the rents, at a 1-to-1, that's all they're looking for. So they're not looking at your personal cash flow. They're not looking at your personal income. Your credit score matters, but tax returns, all that doesn't matter. It just matters that as long as that particular property has enough income to cover the mortgage payment. That's what it boils down to.
So there you go, investors. That seems like the probably one of the best loans we talk about on the investment side for investors to go after. Now, when we talking about on the residential side, people are looking for somewhere to live. What do you think is the best option for today with today's market? And I know, it could fluctuate and we just never know the situation because of credit scores. Mm-hmm. But what are you thinking that people should really go after right now?
Again, it's not any one particular loan type, but I can tell you what people should go after if they're thinking of applying for just about any type of loan. Getting their credit up. That's going to make one of the biggest differences. And that the lower your credit is, the more expensive it is. Now, we can still get people approved. I have programs that can get people approved down to a 580 or even a 550 credit score. Now, it's difficult to get approved on those, but we have programs that can approve people along those lines.
So and not to cut you off, no. I'm sorry. So how long does those programs usually last, and what are the qualifications to get in those type of programs? So
for programs like those specific, and I'm gonna be honest with you, I have access to them. We don't do a lot of those because they're hard to qualify. Most of the people these days, you kind of need your credit in the 600s to qualify. Okay. Now, I've got what I'm saying is I have programs that go down to, let's say, like, for example, FHA goes down to a 580 credit score. Okay. It used to be pretty easy to get somebody approved under FHA. They only have to put down 3.5%. I was getting people approved and closed all the time with 580, 585 credit scores. The underwrite can be a pain in the neck, but we were getting them approved and helping get people in homes. But nowadays, just because of where the economy is and the way they're approving loans, it's just a little more difficult to get people approved with lower credit scores. So the best way to get more options is to have higher credit. So, a 620 is really kind of the bare minimum these days in order to get an approval. Can I get an approval under a 620? Yeah, they're going to probably want some more cash down, but it's possible. But where you really want to be is above a 680. So right. That's where people need to shoot for, is being above a 680 credit score. And another great product to combine the two things we were just talking about, investments and personal loans. As you and I have spoken about this before, but we've got an FHA product. It's just an FHA loan, and it's for investors and somebody that's looking for a personal residence or is okay in living in the property. So as long as you can buy a 2 to 4plex unit rentals, as long as you live in one of the units just for a year, you only have to put down 3.5%. Now that's huge. So normally, if you're buying an investment property, you've got to put down 25%.
So they only got to put wait, Christian, because that sounds like something we need to repeat so people could have a better understanding of what you just said. You said they would only have to put 3.5% down, as long as they're willing to live in the property.
So it has to be their primary residence just for 1 year. Okay. So they just have to live there for a year, and after a year, you can turn that into a rental unit if you want. It's a regular FHA loan. There's no gimmicks or anything like that. This is just a program that FHA has. Now, there's some underwriting that goes with it that there has to have rental income and things along those lines. But it's fantastic because that's what I'm saying. Normally, there used to be programs where you could buy a rental property and only have to put down 15%. Most lenders don't have that anymore.
Right.
20 is the minimum. Most lenders want 25% down. Now you don't have to live there because it's an investment property. But so that's the only caveat. You live in it. So you buy for it. This is the most ideal thing for a person who's considering getting into real estate investing. There's little down payment.
Okay.
Their rentals are in their backyard, so they don't have to drive across town every time something's going awry. They got to fix a toilet or fix a light bulb, whatever it is. They're all right there. Nobody can hide from them. They're not going to pay rent. They just walk around the back and knock on the door. So it's easier for them. And then, look, at the end of the year, if they decide this ain't for me, I'm not a landlord, well, you just turn around and just either sell it, or you can turn around and just turn the other one into a rental unit and let somebody else manage the property for you. So there's plenty of options. That's
kind of sound like one of the best things that a new investor probably definitely should do and consider. It sounds like less of a risk. Right, and it sounds like they can actually see their money flowing every month instead of them kind of being stagnant, having to hire a whole bunch of property management companies to go out and manage their property.
If they feel comfortable managing the property, that's what's great about it. Is their property's literally their backyard. It's literally their backyard. And it's a lot easier to handle maintenance and things like that with it. So
yeah, man, that's actually pretty cool, Christian. So when we talk about these products, what do you think as far as doing like getting into the rental business, right? Because I know that you don't typically get into investments, but for new investors, what do you think with getting into the rental business? Is that one of the best options? And also, do you think people should? Let me see how I want to put this. Because yesterday I got a client I spoke with, and she wanted me to give her some of the best advice that I possibly can. And I like to specialize in like new builds. So you do think they should get more into remodeling property, actually building it themselves, since the economy is kind of changing a little bit?
So two parts to that. So I'm talking about spec houses. I think if somebody's trying to build those, I don't know what the cost of building materials is right now, but I think it's pretty elevated. So, but new construction is pretty popular right now because there's no houses out there. Everybody who's bought a house or had a mortgage and within the past 5 years is all refinanced or bought their house at 2 to 3%. So you've got all these people out there, pretty much an entire nation of people who have all refinanced or have our interest rates in that range. They don't want to sell that house and go jump into a 7.5% rate or 7 or 8% or whatever it may be interest rate.
Right.
So that stifles the market. There's no inventory. So what happens when there's no inventory? Well, the builders want to start building houses because it's a great opportunity for them to start selling houses, because if you can't sell any houses because there's none out there, well, you got to go make some. So that's what they're doing. So now, as far as I think before you start getting into building spec houses, and spec houses just mean it's speculative. That means the builder builds the house without an actual buyer lined up. So they're building it with the intention of selling this house upon completion. Custom house just means that they're building a house for somebody. The house is already sold. So spec houses can be risky because you could build a house and it could sit on the market for a year, and that whole year you're paying interest on this built house, and nobody's living in it. You haven't sold it. So, rental properties, rentals are great because you've got that monthly income all the time. So the reason why rentals are so good right now is because of exactly what I just said. There's no properties out there for people. There's no houses for people to buy.
Right. There's no inventory.
And so there's very few, as I understand, we have to ask one of the knowledgeable real estate agents, but as I understand, there's not a lot of places for rent out there right now.
Right.
And so, rentals are a commodity. So if you can find a place and you're willing to put in the time and the investment, and you're considering buying or getting into doing investment properties, this is a great time to do it. If you can find something to buy and have the money to be able to put down as a down payment. Another thing, down payments for stuff like this too, they can be gifted. So if you've got a young person that's an investor and they've got some family members that want to help them start off, that 3.5%, I mean, that can any portion of that can be gifted by family members.
So when we're talking about building, right,
and others,
would you suggest an investor to buy the land first, or should they wait to get the land with the loan?
It's 6 in one hand, half a dozen in the other. I would say that if you're buying a piece of property, it depends on why you're buying the piece of property and not ready to build. Usually, I would normally suggest, if you're going to build, buy the property, do the construction. Let's get it all done at one time. You got one set of closing costs, and then that way you can buy the property, start construction within 30 days, and then it's just within 9 months, however long it takes you to build, you're done with your project. If you're buying the property, I'm convincing myself of my answer now as I'm going through it. So my answer is ultimately going to be to buy the property and do the build at the same time.
Right.
Because you got 2 sets of closing costs otherwise. You got to buy the property first, the land, you close on that. And then once you go to turn that into a construction loan, then you have to pay off that loan if there's a loan on it, but then you got a new loan for the construction. Okay, and construction and closing costs are not inexpensive right now.
Right.
So that can save you a lot of money. In addition, you also got this piece of property that you're holding on to, that you're paying monthly payments on. Now, of course, you're knocking down the principal, but you're still paying principal and interest on this property every month that's just sitting there doing nothing for you. So normally I would probably say if you were just interested in buying a lot, depends on what your intention is. If it's a good deal, well, fine, pick it up,
Right.
If your intention is, well, look, I want to buy some lots and, in the next couple of years, we're going to start building on these, but right now I just want to accumulate the lot. Well, that's your plan. That's fine. But
Right.
Ultimately, if you're weighing them both out, I'd say if you can get the lot and the construction at the same time, much easier process.
So we just pretty much just pull a loan first. And so what type of loan would you pull for something like that?
So it depends on what type of project we're doing. So if it's commercial, were you talking about for construction loans?
Yeah. And I'm talking more on a residential side.
Oh, on the residential side.
Yeah.
Okay. So if somebody was just trying to build their own home, like a custom home for themselves, we've got a one-time close construction loan.
Okay.
Which is basically exactly what I was just talking about, but where I was talking about where you had the 2 sets of closing costs, but for the consumer side as opposed to on the commercial side. So a one-time closed construction loan would just mean, so normally the way it used to be was you would have to buy the property and you'd have to get a construction loan by itself. Construction loan, it's called interim financing.
Okay.
So you don't have a mortgage on the house yet because you don't have a house. So you got to buy the land, you got to pay a contractor or whomever, but they got to build that house. that in itself is going to probably take anywhere from 6 months to 9 months to a year, whatever, however long it's going to take to do that.
Right.
So once that's done, that loan, that's an interest-only loan that's held by the bank. That's not a mortgage. So the bank's going to say, okay, your house is built, so you need to pay this loan off. You're not going to sit on this. We're not going to hold this money with you paying this interest only for the next 30 years.
Right.
You need to get a mortgage. So they say, okay. So then they got to go to the bank, and then they get a mortgage, and then that's when they would come to somebody like me, Fannie, Freddie loan, VA, what have you, FHA, and then we would do a new loan to pay that construction loan off, and then put them in the traditional 30-year mortgage.
Okay.
So that's 2 loans. And that's the way it used to be done. Now it's much more popular. They combine them into one, and it's called a one-time closed construction loan. So as I mentioned, you had to pay 2 sets of closing costs with the other loan. With this one, you close one time. They do the construction after the construction's completed. Then it just rolls into your conventional loan for you, and you don't have to reclose. You don't have to do anything. A little paperwork from the lender, and that's it. So most lenders are doing that now.
So would that process work? Would that be the same process if an investor was using it as investment property?
No. So that's what I was saying. It's a different product for that. So I would have to. I used to be I was a commercial lender for about 10 years when I was in banking. Before a lot of things, but before I got into the mortgage side of things. But when I was doing those, we didn't have any one-time closed commercial loans.
Okay.
So now, some banks may have those. We would just have to check around. If somebody was interested in something like that, then we would just check. But traditionally, you've got the construction loan, and then it goes into the a permanent loan after that. So,
Okay. So y'all, man, if y'all have any questions for Christian, how can they get in contact?
Absolutely. Well, again, I'm Christian Fajani with Nations Mortgage. My cell phone number, which is the best way to get in touch with me, is 985-705-0097. And then my email is just my first name, Christian@nations1.net. So it's Christian@nations, NATIONS1ONE.net.
So y'all definitely make Christian y'all go-to guy if y'all looking to get a loan, y'all looking to purchase y'all next home. Y'all already know who it is. It's your boy David E. And thank y'all for tuning in to It's Up From Here. Make sure you like and subscribe. And y'all already know how it go. You gotta like the hustle. You gotta hear the hustle, see the hustle, speak the hustle. Peace.
Thank you for having me, brother.